G'day, I'm Andrew Klukas from Extra Mile Advisory, and I wanted to speak with you today about the Extra Mile investment philosophy and the 9 principles that we follow. Firstly, all of the investments that we make are in your best interests. They're in the client's best interests, not my best interests, not the investment house, but the client's best interest. Secondly, and this is one of the most important investment principles there is, your investments should be diversified. So we'll invest you in a range of Australian shares, international shares, listed property, fixed interest products, and cash. There's a good mix between growth and defensive assets. It's really important that your eggs are not all in one basket, but that your investments are diversified. Thirdly, we invest you for the long term. So we don't speculate. We don't do things that are crazy. We're not buying and selling on a daily basis. We just take advantage of the fact that markets over the long term historically have always had a positive upward trend, and we take advantage of that. Fourthly, we've got a firm belief in passive investing. So 80% of the time, passive investing is more effective than active investing. And all that means is that a lot of our investments will try and track an index like the Standard & Poor's 500 index in the US or the Australian Stock Exchange 200. If we track that index, we know that over the long run, those investments will do really well. Principle number 5, we try and minimize costs and keep the investment costs low. There are a lot of really expensive investments out there. Not all of them are all that effective. We try and minimize costs. It doesn't mean that they're cheap, bad investments. They're low cost, high quality investments. 6th principle is that we try and keep things simple. There's no need to overly complicate your investments. A good, simple investment portfolio that's well diversified, keeps low costs, an elegant solution. We know over the long run you will do well. Keep it simple. 7, we make sure that your investments are aligned to your appetite for risk. And there's no right or wrong answer here. Some people will have a higher appetite for risk than others. Some people will be growth investors, some people will be balanced, some will be conservative. And we just make sure that we understand what your appetite for risk is and then align your investments to that risk profile. Principle number 8 is rebalancing. So just like a car needs to have its wheels rebalanced, your investments will occasionally need rebalancing. We know that you will get better performance over the long run if your investments are well balanced. And finally, principle number 9 is that the best investment decisions are made as part of a financial plan. So we'll develop a financial plan that is tailored to your specific financial needs, to your goals, and will help you to achieve them. Lastly, just a general advice warning that all of the information contained in this presentation is general in nature. Thanks for listening.